Hi, Kerry again at Best of Us Investors. I made a mistake last week. I put out a video on the power of a Roth IRA and how you could accumulate up to $4 million if you just matched the return of the Nasdaq, I believe it, or the S&P 500. And I made a mistake in that video. I didn't account for the annual contribution of $600 or $6,000 each year, and so it threw off. It ended up with at a 13% return at about 4 million, and it's substantially more than that because you are making a additional contribution each year. So I got an email. Actually, I got two emails. The first one was from Sam. Second one from Sam as well. He's a member of our tribe. I've gotten to know him over every Friday. We have a Zoom call, and so I've gotten to know him, and we've talked about the importance of educating young people and making them financial literate and get them into investing at an early age. And he had written me and asked me to send him a copy of that pirated video that I did on how a Roth IRA works. And then he wrote me a second time and said, can you send me a copy of the Excel spreadsheet that you created? And I went to find it to send it to him, and I found out I had accidentally deleted it. And my skills are only so deep, so I couldn't dig it up. So I rebuilt it. Well, as I was rebuilding it, I realized I'd made a mistake. And I want to show you the mistake I made right after I share that this is not financial advice, and I'm not your financial advisor.
Best of Us Investors presents Kerry Griegmeyer.
Okay, let's go to my computer and I'll rebuild the Excel spreadsheet without the mistake, and you'll see what happened. This is the chart that I was referring to that Sam asked me to send him a copy. And as I said, Sam is a high school economics teacher, and so it's quite pertinent. And when he asked me to send it to him, and I realized I had deleted it. So I went back and rebuilt it. And I'm glad I did, because the fact is I'd made a mistake. What I had done was I had not included the $6,000 additional contribution each year and added that into the prior years plus the gain. So that number was 6,000 short. Well, that carried forward throughout the whole thing. And if I remember right, this number was about 4 million, and you can see it's now almost 16,500,000. And that's based on a 13% return, which is kind of the average over the last 20 years for the S&P 500. And so I then did the same thing that I did in the original graph, or Excel spreadsheet, and say, okay, let's assume you got aggressive and as an 18-year-old, and you invested on your own, and you made this contribution. What would that turn into? And as you can see, it turns into almost $200 million, a substantial increase from where we were before the mistake. The other mistake I made, and one of you pointed out, and I really appreciate it, is you can't contribute to a Roth IRA unless you have earned income. So the comment that said that brought that to my attention. Basically, I said, well, okay, I guess I'm going to have to put my grandchildren on my payroll, and that would be one way to take care of it. If you, as a grandfather, had a ongoing business and you could put them on the payroll for $6,000 a year, you could make that contribution. And then at some point, you certainly hope that you've instilled the power of this investment. Because again, can you imagine if your grandfather had done this for you, and you at 65 had 16, of course, the Roth IRA wasn't available, and $16.5 million of tax-free income that you could access. And if you were an astute investor, which I'm sure you would have been, that would have been 196 million. So Sam, I sent it to Sam and said, okay, I'm glad you brought it to my attention. I'm glad I accidentally deleted it, because by doing this, I corrected my mistake. So let's go back. And then I also want to rerun that video that I pirated to explain how a Roth IRA works. And I just sat here and see I misspelled the word rate, but that's okay. I'll take care of that. So by all means, this is something you need to share with any 18-year-old that you can put on your payroll or that can go out and get a job. So Sam, as I said, is a high school teacher in a private school up east, and he wanted to share this, and I want you to share it, because I think it marvels me that if you can teach someone at a young age to have some financial responsibility, that you could accumulate hundreds of millions of dollars just of tax-free income. Tax-free. Can you imagine, if you're in your position today, if your grandfather had brought that to you and you were at 18 years old astute enough to say, yeah, I'm going to get a summer job and I'm going to work afternoons and get a paycheck so that I can put aside $6,000 for the next until I'm 65 and not have a thing to worry about as far as financial independence. A powerful tool. And so that's why I wanted to correct my mistake. And now I want to show you the video again that I pirated it so that you know exactly how to use a Roth. And then I'm going to show you the video again on iTrust Capital, which is a cryptocurrency eligible Roth IRA or any form of IRA. So
a retirement account designed for the middle class is now also a tax-free piggy bank for some of the wealthiest Americans. How? Turning a Roth IRA into a giant tax shelter. First, here's how a Roth works. You invest a limited amount of money each year, and once the money is in the account, it's never taxed again, as long as you don't withdraw it before age 59 and a half. There used to be income limits on who could get one, but since 2010, there's been a backdoor for the rich. Pay a one-time tax, and you can turn a traditional retirement account worth millions into a Roth. Some others use investment tricks to grow a massive Roth. Step 1, create your account.
One Roth IRA, please.
That was easy. Step 2, invest. Use money in the Roth to buy low-value shares of a private company before it gets big. Some founders of startups buy shares in their own companies with dirt cheap prices set by the companies themselves. Step 3, sell. As the value increases, sell some shares and keep the profits in your Roth IRA. Then, reinvest the money pretty much however you want. Step 4, wait patiently, and at age 59 and a half, you can begin to withdraw funds tax-free. Here's an example. In 1999, before he became a billionaire, PayPal founder Peter Thiel had a Roth IRA worth less than $2,000. 20 years later, his Roth had grown to more than $5 billion, the biggest account we found. He won't have to pay tax on a penny of that, and he can start to collect tax-free 6 years from now.
What if you could use retirement accounts to invest in crypto? With iTrust Capital, you can. iTrust Capital allows you to invest in your favorite crypto assets 24/7 with the tax benefits of an IRA. So instead of paying taxes on your crypto gains every year, you can defer taxes till you retire using an iTrust IRA. Or with an iTrust Roth IRA, you can withdraw tax-free at retirement because you're in this for the long haul. Start investing today at iTrustCapital.com.
Again, I wanted to correct my mistake and make sure that you understood the power of a Roth IRA, and I hope you pass it on to your children and your grandchildren. Thanks.